Testing, testing. Can you hear me?
Hear you loud and clear.
Oh, blimey, that was a bit of a nightmare, that. Okay, cool. So I'm not going to try and live stream it again because that did not like me doing that at all. So can you guys see my screen? That's the next most important question. Yay or nay?
Yeah, we can see it, yeah.
Perfect. Okay, cool. So what I've done is I've done a little bit of a few slides to help with today's presentation and today's talk. And the first issue that I really wanted to touch on, again, in terms of like what I like to talk about all the time, is just finance in general. So when we, on some research that I've done, we can see here that in terms of shares actually owned and in terms of assets actually owned by people, shares is actually really low down in the what people actually own. As we can see here, real estate is still like the major thing that people are investing in comparison to the returns that you can get from shares. It's not even comparable. So we can see here in the 1990s, the return on property, National Home Price Index, was quite similar to the kind of percentage return that you'd get from shares. Then in the early 2000s, with the tech bubble and the tech boom, this is where things started to slip away. And as we can see, this kind of returned to a more or less a base level in 2000 to 2010. And just since 2010, which is where I'd say the digital revolution really kicked in to now, we can see the gap in the returns that you're getting from stocks and shares and equities in comparison to property is quite substantial. It's very unlikely that anyone's going to get a 500, 600% return from any property. So let's go on to the next slide. So again, one of the things that we're seeing is there's a massive generational wealth gap. We're seeing that the boomers, they're ending up retiring with quite a substantial amount of money and have got a lot of capital. But then when it comes to Gen X, this seems to be a bit of a problem. They have a little bit less, but the generation that has the least amount of assets is the millennials. And this isn't actually to do with the amount of money. It's actually to do with the barriers to entry. So one of those barriers to entry being property. If everybody's investing in property as their main storehold of wealth, and if property prices are higher than they were for previous generations, then we can see why there's a massive gap. Now, one of the things that is interesting is that millennials are expected to inherit over 68 billion from baby boomer parents by 2030. So that's an extra 68 trillion globally that should be coming in to millennials' hands to be invested into assets or on consumer products or whatever it is that millennials spend their money on these days. So one of the things that I've been looking at quite a bit is the gap between cash payments and just cash in general. So this is a percentage breakdown of in 2017 to 2018, the breakdown of how cash is slowly disappearing and electronic payments are taking over. So we can see here purchases using cash in a typical week is reducing quite dramatically. This is the 2018 image. So you can see the jump from 2015 to 2018 in the none went from 24% to 29%, and this is in adults. So 2020, I can't wait to see the data to see how much that's actually increased by. US adults making no purchases with cash under the age of 50, 34%, and above the age of 50. So it's not a millennial thing anymore. It's actually just across the border in general. And then in terms of the interesting thing is the purchases using cash in a typical week. We see that lower income backgrounds are spending more in cash. So everything moving to a digital world is actually going to affect these kind of lower income people, especially in terms of the banking status, because you need some kind of bank to be able to do that. We can see that there's quite a substantial amount of people from poor households that are not even banking in the slightest. So millennials are using their digital wallet for 1 in 10 millennials are using digital wallet for purchases. So let's get back to the juice of it. 10-year returns in the market. So almost the biggest winners in the last 10 years have been from tech. And again, if we compare these kind of returns from what you get from property, it's just completely incomparable. As we can see here, the biggest one of the biggest ones at the moment is Tesla, which we're going to be looking at today. And then again, in terms of since their IPO, so we're going to be talking about Airbnb's IPO today. We can see the kind of gains that people can make on investing in equities here. So Microsoft would have been an incredible one, Amazon, Adobe, Apple, some of the biggest hitters there. Now the 1 year percentage change, again, this is crazy. I got this from my mentor, Ian Dunlap, the master investor. AMD, 90%, Shopify, 209%, and Tesla, 816% in 1 year. Then we have the likes of Franklin Dynatech and PayPal, 94%, Square, 198%. And since March, Amazon's actually increased by 194%, mRNA 632%, and QQQ, which is the just tech in general, has increased by 100%, and that's just since March. So this is a bit of homework for people to do, and this is the inverted yield curve. Type that in on Google, type that in YouTube, and do your own research on that one. Now, in terms of the technicals that we're going to look at today, is something called the Can Slim, from a book called Trade Like an O'Neill Disciple. So this methodology is basically like a formula for what you need to look at before you invest in anything. It's quite simple. Probably this is a bit where you'd want to take some notes. So what is Can Slim? C is, first of all, you want to look at their current and quarterly earnings. We do that on this show. We can see the companies that we're going to look at on Yahoo Finance. We expect that their sales are going up by 20%. Annual earnings increasing by 25%, which is the A. The N is, have they got new products, new management, or new conditions that are making them more favorable? S is supply and demand. Is there actually a supply and demand for that company? L is are they a leader of their industry? Because we don't want the laggards. And I is institutions. So are the institutions, the big pension funds, the big mutual funds, are they investing in that company? And then M is the market direction, which is the technicals, which we're going to also do today. So one of the technicals we're going to be looking at is the cup and handle. So the reason I want to look at the cup and handle, and this is my chart pattern for 2021. The reason I'm choosing this as my chart pattern, because it uses one of the chart patterns that I use anyway, which is the double bottom. But the reason also is because it's great for breakouts. So what you're looking for on a cup and handle is anything that does this kind of shape here. So you can see the base is the cup here. And then this little bit here, this little retracement is the handle. And then from there, this is where we will get a breakout. So these measurements, this is what you can expect. It doesn't have to stick to this. This is for long term and for short term and for day trading. Now, one of the things that you are looking for on the breakout of a cup and handle is that the volume has actually increased to signal the breakout here from this resistance. But we're going to look at that in more detail in a second. So again, in terms of knowing, this is a bit of a better example. So this would be the retracement on the cup. So this bit here is this bit here. Now this is actually taken from the March rally. So one of the things that you're looking for is this 1.5% increase in the rally. So that's, is the market now higher and has it closed higher? Yes. Now, is the next day, is there more volume in the market? Yes. So this is your indicator that from here, the cup handle is complete and it's going to go up from there. So we can see it did a slight retracement, but it's not come down to the low. So your stop would obviously be here. You've got your first indication here, and then you've got your 1.5, because it's clearly a 1.5% difference between this candle and this candle here, and the volume has increased. So that's what you're looking for on your cup handle. Cool. So these are two books that you probably want to get: How to Make Money in Stocks by William J. O'Neill, and then Trade Like a William O'Neill Disciple. They're available on Amazon. Unfortunately, I don't get any money from you buying things from Amazon. And now we're going to look at Airbnb. We're going to get into the meat of Airbnb. So I'm just going to stop sharing my screen temporarily. Bear with me. And we will go into... a sec. Now let's see if Facebook's working, because I need it to, because that's where I've put all the information. Oh, we've got people in the waiting room as well. Sarah, Aaron. Hey there, guys. Just waiting for your signal to sort out. Cool. So we're just going to wait for Sarah's to come through. Bear with us a sec, guys. So what all you missed so far is we're just talking about the cup and handle pattern. We're going to go back to those slides in a second anyway. I'm just pulling up the data on Airbnb from the Facebook group. Bear with us. I might as well just put it live as well. Just on screen share. So it should be sharing my screen on Facebook. Okay, cool. No, it doesn't want to share on Facebook. Okay, cool. Fine. Let's just carry on. Here's what we're looking for. So we are looking for files. Okay, let me know when you can see my screen again. Oops, chat. Barely hear me. Can you hear me a bit better now? Testing, testing. Hopefully you can hear me now. Okay, so let's go back to screen share. Cool, perfect. Hopefully you can hear me now. So this is the S1 from Airbnb. So it's just something you have to release when you're going public and you're trying to, oh no, that's the wrong one. Oh, shares. I must have just posted it as a link. Here we go. So let's have a look at these fundamentals and let's pull up booking.com at the same time and compare them. Let's have a look at Booking first. Okay, cool. So booking.com, market cap of 87 billion. And then when we look at the financials, when they come up on the side, they've missed their earnings target 3 times in a row. So now annually, let's have a look at this. 10.74 billion in revenue, 2.13 billion in earnings. 2017, 12.68. So we have an increase in the revenue from 10 to 12, 2.34 billion in earnings. So a nice increase there, only by 200 million or so. Then a massive jump in 2018. We can see it went from 12.68 revenue to 14.53, and 2.34 billion up to 4 billion. Then in 2019, from 14 billion revenue, 4 billion earnings, up to 4.87, almost a whole 1 billion jump. Not as good as the 2017 to 2018 jump, but still quite a substantial jump in both revenue and earnings. So for me, straight away on the annual, that looks good. Let's have a look at them on quarterly. Now, quarterly, obviously, booking.com would have taken some massive hits because of COVID. But in general, let's have a look at how they've done. They still managed to revenue 2.29 billion in their worst quarter ever, minus 699 million in earnings. And then they've recovered, and they're recovering quite well indeed for quarter 3. So it would be very interesting to see their quarter 4 earnings. I think for me, that's what's going to change absolutely everything for booking.com. So let's look into their financials. So their total revenue, as we just looked at those, for some reason it's not showing their cost of revenue, which is very interesting. But in comparison, if we just go on the 2017 and the 2016 data, their cost of revenue to their actual revenue is quite low. If this is in thousands, that would be 250 million they had to spend to generate 12 billion in revenue, which is crazy. And again, we can see somehow they managed to decrease their cost of revenue in 2016 to 2017. So that's quite impressive for me so far. On their R&D, we can see research and development, they actually increased over the 2016 to 2019 period. They increased it by a few million. Then general and administrative, again, this is like lawyer fees and so on and so forth. They've actually managed to decrease that quite substantially again. So that for me looks like a good CEO that kind of knows what he's doing. Now, in terms of the net income, again, pretty good. It's grown continuously year on year. And again, the earnings per share increased. So all of those fundamentals so far for booking.com are quite healthy, to be honest with you. Now, when we look at the assets, so a nice increase in assets, but let's compare that to total assets. What is it? Okay, cool. So total current assets at 9.83 billion in comparison to total current liabilities, 5 billion, which again, their assets are better than their liabilities. That's always good. And if we look at it as total assets, that'll be 21 billion of total assets. And if we look at total liabilities, that'll be 15 billion. So again, quite healthy. It's a good little ratio that they've got there. Their debt isn't too high. Can they cover their debt with their cash? Let's have a look. Yep, they're sitting on 7 billion in cash, which is a huge amount of cash to be sitting on. And again, this is quite interesting. Over 4 billion in investments. So let's have a look at the cash flow. Okay, so depreciation for them is quite low, to be fair, in comparison to when we look at companies like Tesco. Their depreciation is like a couple of billion, whereas theirs is only 500 million. Again, minus 367 million in terms of investments. What is that investment they've made? Would be interesting. And they seem to be getting quite a healthy return yearly on the sales and maturity of investments. You can see this is something that grows quite a bit for Booking.com. And again, quite a few heavy purchases of investments back in the days. So for me, just on these basic fundamentals, I quite like Booking.com, to be honest with you. I quite like their fundamentals. Now, if Airbnbs match up to those, it's a great IPO. So this information here is readily available for anyone to get access to on Facebook. I'll just click the link. And this will just give us a bit of an insight into their revenues and so on and so forth. And at the moment, that's a good opener. 13 years later, 4 million Airbnb hosts, which when you actually think about it, isn't that many in comparison of the grand scheme of things. So some of the additional research I've done, the global market size of this industry is around 600 billion, and it grows on average about 3% year on year.
He knows he's got to lose weight.
Okay, let's keep running down. Let's get to the figures. So this is about their market opportunity. We have substantial market opportunity in the growing travel market. So what the interesting thing is with Airbnb at the moment is they're mainly focusing on short-term stays, and their new focus is actually the experience market. Now, in terms of the experience market, this now means that they could be starting to tread on the toes of companies like Eventbrite, which is where it gets very interesting. Okay, cool. So gross nights and experiences booked. So what's the difference that we're seeing? We're seeing a year-on-year change of 31% from month to month. So if we look at this we've got a steady growth here. And again, this is in millions, except percentages. So from 23 million to 26 to 28 to 26 to 16 to 8.7. So you can see they have a bit of a dip in the May-April period of 2020. Is that expected? Yes. But what's very interesting is their recovery rate. So they're now doing in September almost the exact same numbers or close to what they were doing in November, December of 2019, despite COVID, which for me, that's very, very impressive. And obviously we can see here all the cancellations that they had and alterations that they had, which was definitely affected by COVID. And again, the key area is, are the experiences up? And yes, they are. Cool. Monthly gross bookings value trends. So we'll keep going through, get to some more juicy numbers. So far, I think it's a great industry. Aha, okay, so here's their numbers here. Okay, cool. So their revenue, 2.5 billion to 3.6 to 4.8, and then a dip, quite interestingly, in 2019, and then obviously they've got hit the hardest with COVID in 2020. So what is the increase? Is there an increase in the cost of revenue? Yes, there is. But again, the cost of revenue is like 4x margin. So it's 1.1. So let's call it 1 billion for the cost of revenue. And then they make almost 5 if we round it up to 4.8 is 5. So for every pound they're spending, they're making £5 pretty much, which is good. And again, even though they've had a bad year, their cost of the revenue to the actual revenue is it's quite good. So let's have a look at other things. Sales and marketing, is that going up? So for me personally, this is something I want to see increasing in a company, is their sales and marketing and their research and development and product development. So if that's increasing, that's always a good sign. Total costs and expenses, income loss from operations. Oof, obviously took a hit here this year. But what we want to see is their net. We want to see their net profit, because it's all good showing us all these revenue numbers, but what are they actually keeping? What's actually the profit? Okay, cash. But so far, good numbers. Nights and experiences booked. Earnings before interest tax. 2017, 70. Oh, that's net loss. Okay, I think it's a net cash provided by used in operating activities. Okay, risk factors. We're not interested in their risk factors. Not yet, anyway. But yeah, this is where you can find the information. Please do your own research, as I am not a financial advisor. I am not a fiduciary. I myself will be investing in Airbnb just because it makes sense to me. I use it myself. When I do my traveling, it's literally saved my life at times when traveling and then ending up a little bit stuck in places. It's made a massive difference to me. So Airbnb, and again, with people in difficult financial situations, they're going to be looking for alternative ways of making money. And I think Airbnb is one of those platforms that people are going to be going to try and make that extra bit of cash. So let's have a look at booking.com on the technical side. So on the monthly, we can see really nice, solid trend line up. Had its little dip during COVID, recovered quite nicely. It's looking like it's coming to an all-time high. So the all-time high is 2,227 pound a share. It's coming up to that all-time high. Is it a good time to buy now? Let's have a look. I would say no, because it's hit the tip of the Dochan. RSI, what's the RSI saying? RSI isn't actually peaking over, so it's not saying it's overvalued, so it's saying it's still got a bit of space. And again, if we take this here is the new support, then yeah, it's got a lot of leg room to go up. So let's have a look at it more on the daily. It's popping out the Dochan here. Pop in the Bolly. See it squeezed out of the Bollinger Band here. So technically it should have moved down, but it didn't. It's just turned up. Let's see if we can get the 10-day moving average on this. So we've got our moving averages it's quite solidly above all the MAs, including the MA 100 and the MA 20. So it's above average. So yeah, for me, booking.com, if booking.com is doing this well, then I'm expecting similar returns and similar growth for Airbnb for me personally. Then if you want to understand Airbnb a little bit more, I've got a little document sent to me, which I'll give to you guys. And that is the initial Airbnb pitch deck from 2011. So this was their original pitch deck that they used to pitch early investors in 2011. So we can see already just from this original pitch deck and then comparing it to the data that we've got on them now, you can see how they've grown if you look at this in terms of the total market and the amount of trips that they were serving at that time, which was 84 million. So again, do your own research on that. Better understanding of their business model, their share of the market, what they do. Average spend per night is 70. Don't think it's that anymore. I think it's about 110 now, £100, $100. And their average fee is $20. So that was their projected revenue by 2011. And we've just had a look at their revenue and it's way higher than that now. So again, if you just look at their business model and their original pitch deck, it will give you an indication of their direction and their growth. And one of the most important things that you want to do with anything that you're investing into is you want to kind of understand or research the CEOs because they're the guys driving the ship that you're about to put money into. So it would make sense to check them out. Cool. So that's those. What else was we going to cover today? What else was we going to cover? Fundamentals. Oh, yeah. Earnings this week. What earnings have we got this week? Look. Okay, so notable earnings on Monday. Nothing that I know of. If anybody knows any companies that are doing any notable earnings, please pop that in the chat and please share. Tuesday. GameStop. Now, GameStop is an interesting one because Michael Berry was invested in this, and I called this a while ago, and I told Morgan. Morgan did some research on it, but the fundamentals were terrible. So it'll be interesting to see how they do on Tuesday after the bell. So that might be one to get in early, especially I expect their revenues to have gone up with PlayStation and Xbox pre-orders. So that should account and should impact them. Adobe after the bell. That's on Wednesday, is it? Yeah, I'm going to expect an up on that one. Kobe Wednesday. So we'll pull these up and we'll have a look at them. And then Thursday is a good day. Costco, Lululemon, and Oracle. Costco, Lululemon, Oracle. Just probably want to get in them, and they're all after the bells as well. So probably want to get in them on Monday. Get in nice and early if you're the kind of trader that trades earnings reports. Just with Christmas coming up and everything, I'm expecting these two to have done well in quarter three. They just look at the historical data and just find out if they've done, when you're doing your research, do they do well in quarter three normally. So that's the earnings for this week. Let's just have a quick look at Lululemon, Oracle, and GameStop. So GameStop, you can see here, it's got a bit of a, it's not the greatest. It's not an uptrend. It's not downtrend. It's now forming an uptrend here. Just get rid of Bollinger Band on that as well. It's way above the MA. Way above the Dochan. From what I'm seeing, that could potentially come down a bit. Although that could be where it's come down to here. This might just be a bit of cognitive bias. Me trying to see something, but no, it's your call on GameStop. From 1680 to a possible 1943. So I'm gonna call on that one. That's on the daily, and let's see if it was weekly. No. Okay, so that was GameStop, Lululemon. Out. Got monthly. Let's tidy it up a little bit. Get rid of all this. Just a clean look. So we can see Lululemon, really nice uptrend, and that's been an uptrend since mid 2017. And again, did they really get affected by COVID too much? They had a really strong bad month, but then literally the month after that, recovered amazingly. There's no cup and handle or anything to show here. It's just a straight uptrend. Let's draw in the major, or what we can of the major. Not the greatest again, but it's what we've got at the moment. Weekly. Okay, yeah, in the daily, nice little uptrend there. Got these are more cleaner touches. 1, 2, 3. potential retracement down. Potential move down and touch the trend line here at about 369. Lemon. So it'll be interesting to watch. And then the beastie. I can't believe I've never drawn a trend line on this. Like as if. I'm going to say from there. It's not the cleanest, but yeah. Okay, so the last time this really touched the trend line was here, June 2020. Let's see how it did last December. So came down and touched the trend line. Okay. Had a bad time last year, 2018. What did it do? Yeah, it tends to not do too well in December. That's interesting. Okay. It's a weird one. Past data says it's going to come down. Could it be coming down to here? That doesn't make any sense with Thanksgiving and everything else. But hey, being as it's an overall uptrend, I'm not going to buy. However, what I am going to do is if it comes down to here, the edge of this Dochan, potential good buy point might be 360 and then up from there. So it might come down during the earnings and then bounce off that all the way up. It'd be fantastic if it hit the trend line, but I doubt that'll happen. Cool. I think that is all I'm going to cover for today. Any questions on anything anyone's looking at the moment? Pop up in the chat. No. Okay, final bit of goodies. Let's have a look at the ARC list. So the ARC list is my current watch list, major watch list. Pretty much any of these on my ARC list. As you know, I'm going to be investing in ARC as an ETF. Why has it just done that? So let's just go the list. Oh no, why has it done that? Okay. So let's just recap on what ARC is. ARC is an ETF that gives you exposure to multiple companies instead of just one. And if we look at their holdings, this is probably my favorite holdings. It's in Tesla, Roku, Square, Spotify, Teladoc, Facebook, Pinterest, Slack, Snapchat, Tencent, PayPal, Netflix, Unity Software, Zillow, Shopify, DocuSign, CrowdStrike, Nintendo, JD, Taiwan Semiconductor, Zoom, Alibaba, Synopsys, Nvidia, Adobe. So if you're invested in ETF in ARK, if any of these go up, guess what happens for you? You go up. So what I'm now doing is I'm trying to do my own research on all of these companies within this to pick some that I'm going to have for a long hold. So far, I've narrowed it down to Square, definitely. You've seen the fundamental research we've done on Square. PayPal, it was between Square and PayPal, but I think it's going to be PayPal, to be honest with you. Tesla, obviously, so PayPal and Tesla, and now it's just about picking two more. I'm currently in Alibaba, but I'm thinking of selling my Alibaba, and I think I'm going to take Nvidia, just because I've done a lot of research into Nvidia. If anything, Nvidia is the company I've researched the most. The rest, I haven't done enough research on them yet. And then potentially Netflix. Let's have a look at Netflix. Let's just do a quick look at Netflix. Although, to be honest, I think Shopify is a big shout for me, just because of the John Wexler news. So John Wexler was one of the former directors at Adidas. He's the one that managed to get the likes of Kanye, Pharrell, Paul Pogba, all these major players. He got them to come, ASAP Rocky, to come over to Adidas. He's now working with Shopify to help celebrities create their own brands that aren't going to do just trainers. They're going to have like a whole rollout. So I'll just do a quick look at Netflix in terms of their earnings. Yeah, that's solid earnings. They are not having a problem at all. Yeah, consistent increase. Yeah, they've done great. Potential buy point for Netflix and potential buy point for Shopify. Let's have a look. You don't want to buy the high. You want to wait until it's come down a bit. So Netflix, just a bit too high here. It's come down. If you can get it at 414, which I doubt you will. Okay, you know what? Netflix is a good price now, to be fair. This would have been ideal, 463. Definitely think it's going to get up to 600. Definitely by some point next year. That's almost guaranteed for me. Like, obviously nothing's guaranteed, but it would take a miracle for Netflix to not reach 600. So yeah, Netflix, good shout there. One, Shopify. Shopify already done the fundamentals on. We'll have a look at the technicals. Ooh, Shopify buy point was literally Monday the 16th of November to get Shopify for 85. Would have got it for, and it would have already been at it's already at 109. What's that now? Do I think that's overvalued? No, not really. I think there's still a lot of room for Shopify, to be honest. And if we look at the CCI and the RSI, so CCI is the consumer confidence in it. It's not as high as it was, but they haven't announced any of their major new signings or anything yet. So for me, if you're looking for something to buy yourself for Christmas, buy yourself from Shopify, because I'm gonna. The RSI is saying that it's slightly overvalued, but it's been overvalued for a while. It's had a dip now, So yeah, I think Shopify is my pick of the week. I'm gonna say Shopify is cool. And then anyone that's new to the game that's wondering what could they pick, what should they look at, I posted earlier in the week a pick list from the Come Up series. Where is it? So now that we've shown you how to do fundamental research, this here, anything from here will do you good. Just do the fundamental research, do the technical research. This is the pick list. This is the ARK Invest list. So let's put a little tag on this. And what I'm going to do is from tomorrow, I'm going to start doing a pick list technicals. Cool. Thank you very much for tuning in. It's been a blast. Have I got anything else to cover? Don't think so. Any more slides on the game? No, that's it. Coolios, guys. Thanks for tuning in. It's been a blast. If you've got any questions on anything, drop me a message. Always happy to chat about anything investing related. See you in a bit, guys. Bye.
Cheers, Mike.
Bye.